Right. Hello everyone. Good morning, good afternoon, good night, depending on what part of the world you're from. So, welcome. So, in this video today, I will just give you um a very good concept in trading, which is what we call a divergence, and then we'll see how we can apply a divergence on any currency pair, be it financial market or the crypto market. Okay. So, first of all, we need to understand, we need to establish the whole topic and to know what a divergence is all about. Okay, so what is a divergence? A divergence is simply when price make maybe higher highs, and then you have a technical indicator which does the completely opposite of what price is doing. So, for example, let's say price is making lower highs, but then our technical indicator will be making what? Higher highs, which is opposite of what price is doing. Or whenever price does opposite to what the technical indicator is doing, that's just a divergence. Okay, so today I'll show you the two types of divergence, and in those types of divergence we have a bearish divergence and a bullish divergence. And in those bearish and bullish divergence, there are two types of each of them. So let's start with the bearish divergence, right? So I'll use diagram to illustrate this. So whenever you see price, right? Okay, I can't do that. So I think I need to go and work on my trading view skills. Okay. So whenever you see price doing this, for example, price setting lower highs. Okay, these are lower highs. Lower highs. So price setting lower highs like this, right? So, but then you have your indicator here, your technical indicator, and what does it do? At this point, let's say it does what price did here, right? It keeps doing it. It's following price, right? Making lower highs, lower highs, lower highs. Set this lower high, then set this lower high, and then we have this, and then price goes above this high. So you can see, then we have something like this. Price is now coming down. Okay, so this is clearly what a divergence is all about. Okay, you can see price was making lower highs, lower highs, lower highs, lower highs. At some point, our technical indicator, which could be whichever indicator, I will talk about that, doing whatever price is doing. So it's going lower highs, lower highs, lower highs, until where it got here, it made lower high, price made lower high again, but then the technical indicator goes above and makes a higher high. So you can see it makes a completely different thing. So that's just what we call a divergence. So price does totally different from what the technical indicator is doing. Okay, so this is a bearish divergence, and then in this kind of setup, we short the markets. Okay, we short the markets. This is the number one, the first type of the bearish divergence. And remember, when you're shorting the market, your TP is just above the previous high. Okay, your TP is below the most recent low, and then your stop loss above the previous high. My apologies for that error. Okay, so this is the first, and then the second type we have market does this. We're still on the bearish, we're still dealing with the bearish divergence. Okay, so we have this and we have this, right? And we have this and we have this. Divergence, the concept of divergence is very important, since like the divergence just give you insight of what's coming in, like what's coming in the market, like in a forehand or foresight rather. what's going to happen in the market within, depending on the time frame you're using, within couple minutes, in the next couple minutes, or couple hours or days, depending if you're using days to detect your divergence, or 4 hours or an hour to detect your divergence. So we have this thing, we have this, our technical indicator does this. Okay, goes down at this point, goes up, right, does this, right, and then, so I have to take this has to go higher, right, so, and then this steps low, right, and then it starts going down. Okay, so this is the second type of what? Our bearish divergence. Okay, now in the bearish divergence, you can see price does this. It makes a lower high and then set up a higher high, higher than the previous high. But then what does the technical indicator does? It set up the lower high and then set up a lower high, totally opposite, of what the price was doing in the charts. So this is our bearish divergence. This is a simple bearish divergence. Okay, likewise, when we're talking about the bullish divergence, right, it's just the opposite of whatever happens during the bearish session, during the bearish period. So we have these pullbacks up, pullbacks, right, and then we have this trying to go up, and then this is what our indicator does. Okay, our technical indicator does this. At some point it follows price. That's what indicators does. They follow price at some point and then do whatever they wish to do. They want to do at some other time. Okay, so at this point it will go lower. Okay, and then it will want to take off. So this is it. So you can see here we have a trend line and then we have a downward trend line. This is the first type of what? Bullish divergence that we have. So, and then the second type of bullish divergence is this. Just pay attention, okay, because when you get this whole concept, you can add it to whatever trend indicator you're using. If you have a good trend indicator, you can just add it to your trend indicator and it solidifies your entries. Okay, so we have this. We have this. This video, this whole video is just about creating a strategy. Okay, so we're going to create a strategy, right, today on this strategy I haven't even used before, so we're going to do that. So we have this. Now the second part of the bullish divergence, you see, price made lower low, right? But then our divergence, our technical indicator setting up what? Higher lows, lower lows, higher lows, higher lows, lower lows, higher highs, lower highs, lower highs, higher highs. These are just the two basic and major type of divergence that we have when when you take account of whether it's bearish or a bullish divergence. So this is just the two basic type of divergence that we have. So what indicator are we going to use to, let me remove all these drawings. What indicator are we going to use to detect all these divergences? So the first thing we're going to need is our what we call a stochastic RSI. Okay, stochastic RSI. So I'm going to be using the stoch value of 17, 2K, 1, 2. All these other ones are default. Okay, all these ones are default as it should be. Just the value is 17. So I think yours might be, if you decide to add like stochastic divergence or stochastic RSI, you're going to have like a stochastic divergence. You're going to have like your initial stoch value should be like 14 or 13. So I just add mine to 17 because I don't want everything. I don't want too much noise, because if your values are low, you have a lot of noise. For example, let's see this. Okay, if I decide to put my value at 5 or 6, right? So look at what happens. You have too much noise. So you don't want noise, you want less noise, you want to have clearer view of whatever is going on in the market. If you decide to put in your value at 43, it reduces a lot of noise, okay? It reduces a lot of noise, take out some noise, and give you better precision, okay? Gives you better precision when you're trying to enter your trade. So we can just leave our value for now at 43, since we're just trying to detect divergence using Euro USD, okay? So it's always good you use a higher value so that you can cover out a lot of noise in the trading pair that you're going to be dealing with. So we can see now this indicator, wherever you see this H line and H line here, it means we're dealing with a bearish divergence, okay? So like I said, whenever a bearish divergence appears, it means when you're using the 1 hour time frame, in maybe a couple minutes or hours to come, it just means like the price is going to go down. The market will be selling. So that's what happens here. So whenever you see a bullish divergence, mean in some couple hours or maybe minutes, price will be bullish. Same thing happens here. We're just using plain divergence right now. We're just trying to detect divergence, divergence, divergence. Okay. Divergence, right? You have a bearish divergence here, and then the market sold up. We have a bullish divergence, market went up. Okay, so we're going to create a strategy in respect to this divergence. You don't just use divergence like this blindly, no, because a lot of people have been using divergence blindly. So how do you use divergence blindly? You don't use divergence or either RSI divergence or MACD divergence or stochastic divergence as a standalone indicator. No, you use it in confluence with another indicator, which I most likely recommend a trend indicator. So you can get yourself a good trend indicator and then use that trend indicator with your divergence to get confluence when trading. Okay, so I'm going to get a default. This is a default. I have a default divergence trend indicator here. Okay, so this is my default trend indicator, so that we're going to be using. So like I said, we're just trying to copy strategy. So whenever we see a red line like this and the price is below it, it means price is bearish. Whenever we see a green line and price is above it for a long time, it means price is going to be bullish for a very long time. This we're using the 1 hour time frame. So this is what we do, right? For this strategy, whenever the market is bearish, we just look forward for a bearish divergence. Whenever we get our bearish divergence, that's when we enter and execute our trade. Okay, whenever we see a bearish divergence, that's when we execute our trade. When we're in a bullish setup, we only execute a trade when there is a bullish divergence. Okay, if the market is bearish and then you have a bullish divergence, do not open a trade. Okay, for example, we have this here. This is a bearish trend, but we all have bullish divergences, so I'm not taking any trade here. I will not be taking any trade here. Okay, so but for example here we have a bullish trend and then I have a bullish divergence. Of course, I'll be taking my setup. I'll be taking my trade. So for this strategy, we're going to stick with a risk ratio of 1:2. Okay, our risk is going to be 1:2. Okay, so it means what this 1:2 means is whatever our stop loss value is, okay, our TP is going to be twice stop loss value. Okay, that's just 1:2. TP is going to be twice stop loss value. Okay, so if our stop loss is equal to, let's say, $20 or let's say $200, our TP value is going to be $400. Okay, that's just this risk that we're going to be putting in on this trade. Okay, so we're going to test the strategy. So I would recommend you, whenever you're trying to build a strategy, whenever you're trying to work on a strategy, okay, always get a premium trading view plan. Okay, try and get a premium trading view plan. Why do I say that? Because you have the ability to back test. I don't want you like you see there are a lot of people, that's what a lot of traders do out there on Twitter and everything. What they do is they memorize what happens, that morning or everything, and they just screenshot this whole part and then draw line and tell you position and take a screenshot and then tell you that they expect price coming here and then price came right there and then all those things are just bullshit. This is just what they do. All what they do, they just backdate the time, just send it back and take a screenshot because they already know what happens. They already know what happened at that time, and then that's just what they do. And then, but right now, I'm backdating it from 1st of January 2020. Yeah, January. Let's go to January. Let's go to 1st of January. Good. Now this is our data. 1st of January 2025. Okay, so I think I should get my let's write our strategy somewhere. Let me get like a word pad. Okay, so and let's write our rules. Or should I get a sticky note? Sticky note. I think sticky note is, oh sorry, let's get a sticky note. A sticky note. Okay, a sticky note. Not now. Okay. Yeah, we have our sticky notes. Okay, this is our sticky notes. And then let's write, okay, bearish trend, take sell with what? With bearish divergence. Okay. Bullish trend, take buy with bullish divergence. Okay, that is it. So so right now I'll just play this back. The playback speed, I'll just reduce it by 3, and let's take it slow and see how the whole setup will end. So I'll start it. Like I said, whenever the market's trending downward, it's a bearish trend, and then what we do, we look for bearish divergence and then we short. Oh, excuse me. So we start January 1st. Okay. So keep watching. We just want a bearish divergence to pop up. Once our bearish divergence just pop up, and then we'll just execute. Okay, good. We have bearish divergence here, okay, and the market is bearish. So what do? I execute a sell. My TP is here. Remember I said our TP is twice our stop loss, 1:2. Okay, so if our TP is 2,548, so our stop loss should be 1,002 something. Okay, good. So let's have it this. That's our stop loss. So let's play and see. Let's play and see. Okay, good. Now look at this. The market has switched from bearish to a bullish trend. So what do? We're expected to exit we're already in a floating of profit, $213. So we'll just close it, right, and leave the market. We follow price. Do you understand? We follow price. That's what we do. Okay, so we watch what price does, and then that's what we do. So now we're on a bullish market trend. Okay, the market has switched from bearish trend to a bullish trend. So what do? We look for divergence here, and then we execute our order. Okay. Okay, good. Now watch this. I have a bullish trend here. The market is bullish. I have a bullish divergence. I will execute my buy order, most recent high, and then my stop loss going to be most recent low. Our stop loss is supposed to be um half the amount our TP is. So we can go to 951. Okay, fine, not bad. Let's leave it at that. Let's see. Watch this. Now, immediately we execute. The market's now bearish. Just close. It's okay. Discipline. That's what discipline is all about in trading. Okay. So we're just following everything. No, we're not taking this order because this is a bullish order. So, and the market trend is bearish. So we wait. Wait. Do have bearish? No bearish. We have a bearish trend coming in here, but the market is now bullish. You can see our delta indicator is showing like we have more buys than sell. So we wait. We're now in a bullish trend. So let's watch and see. That's where the patience comes into play. Okay, bullish. Let's wait for bullish divergence. Okay, good. We have a bullish divergence here. Okay, so I execute. I enter my bullish divergence. Okay, so I think let me go full screen. Okay, and my TP this high, which is 144. My stop loss just here. If it's 144. Sometimes you want your stop loss to have a little bit space, and that's why your risk is very important. So I'll take my TP here to 166, so my stop loss can be around 856. So I can have a little bit space in case of swipes and everything. So we're going to be doing it like a normal trade. As price progresses, we can be pushing our stop loss to break even. Okay, because this is a strategy that we're trying to build. So we're testing it and see, we don't know what the market is going to do next. So we're just following through, we're just going through. Okay, good. TP slammed. Okay, you just slammed our TP. Good. So we're still on the bullish trend, right? We're still on the bullish trend. No divergence yet, no bullish divergence yet. All bearish divergence. So we wait. This strategy that we're trying to build right now is very important. Like, if you don't get the concept and why we're doing this, you will struggle trading. So it doesn't matter if you're trading maybe ICT, smart money concepts, or price action. Divergence is very important. Okay, divergence, you need divergence. It's very important. So okay, good. We have a bullish divergence here. Good. So my TP above this high. So my stop loss is going to be 7. Yeah. So my stop loss is going to be 7. Okay. I think it's fair. Okay. 156. Yeah. So let's watch and see. Euro USD. And we're watching for the divergence changing. Okay. Good. You can see our I said divergence. My apologies. We're watching for the trend. So we can see our trend has switched from a bullish to a bearish trend. So we can just close at minus 168, and then watch out for the bearish trend and wait for the bullish the divergence, the bearish divergence to. Okay, good. We have bearish divergence. Although we didn't get in on time, but that would do. So we have 900 because we're looking at TP just below this lows, and stop loss. We should be having stop loss of like we should have a stop loss of like 400, 450. So like I said, our rate is 1:2. Okay, so that's what we are reaching. Good. TP slammed. Okay, so This is a valid strategy. This strategy you can use for prop firm if you love trading prop firm. You can use it for whatever you want to use it for. I think it's a very good strategy. Well, cooking. Well, for now, we do not know if it's a very powerful strategy, but maybe at the end of it, we can evaluate the setup, the trade we took with Euro USD, and know how solid is our strategy. So right now we have divergence here, but the market is bullish, so we do not execute. So we wait. So wait. You see, we have our volume indicator telling us, okay, good. I have a bullish divergence here. You see, I have a bullish trend and then a bullish divergence to execute. My TP is above this pin here, so when I take it above the pin, I have a TP of 1,221. So my TP should be around 1.6. Good. So okay, we can break even, but I just want to give the trade space, give it breathing air to flow. Okay, good. We're out because well, we have a bearish setup coming in, trade coming in, so it took us out without stop loss. So it's cool. Okay, so now on the bearish trade, we're waiting for what? A bearish divergence to flow. You have to learn to wait. You have to learn patience. Okay, so we have a bearish divergence right now, a bearish trend. So I'll take it down this most lows. Okay, so at 1,000, and then my stop loss is 500. 1:2. Okay, remember stop loss. We're out. Okay, stop loss. Heat. It's okay. Market is bullish. So had like 2 losses in a row. The market is bullish, yet there's no divergence. Wait. Okay, good. We have a divergence here. I was almost missing it. So our TP up 800, or let's make it 1,000. So our stop loss could be 500. Okay, so play. We'll be watching out for whenever the price or the trend switches from a bullish trend to a bearish trend. Okay, good. Hit our stop loss. It's okay. 3 consecutive losses in a row. Okay, we're still building strategy. So okay, good. We would have entered this shorting position, but we can see a bullish marker has just appeared. So a bullish trend marker has just appeared. So we're not taking this short. So we'll just let it be. Okay, we'll just let it be. That's the bullish. Wait. Okay. I'm trying to pay close attention to when our bullish. Okay, good. I've executed immediately. So we have our bullish, and then our TP right above. Yeah, 8. Since our TP is 824, or stop loss, we can set our stop loss at 400. Okay, good. Now we can break even our stop loss. Okay, we can break even our stop loss. Like I said, we're stimulating like live trading. So what we're going to do on the live trade, that's what we're going to do. So because we're trying to build a strategy, good. We have a divergence again. We have a bullish divergence again. So we'll take it. We should. 874 stop loss 4. Okay, why not? Let's watch and see. Good. It's marked our stop loss. Now we have a bearish trend. We have a bearish trend. Market's bearish right now. We aim at bearish. You can switch to whatever time frame that you would like to. You prefer trading. Okay, so I just love 1 hour time frame. Okay, so we're looking for. Okay, good. Yeah, the market just popped up. So no, we're not buying. So wait for bullish divergence to come up. Wait for bullish divergence to pop up. Bullish divergence right now is all what we're waiting for. Bullish divergence. We're still waiting, so it's a patience game. You have to be patient. Okay, we're still waiting. Sometimes that's what building a strategy is all about. Or taking time, back testing, taking hours, back testing, trying to get the best version of that strategy and maximize your profit while minimizing your risks. So, okay, it was a fake out. Okay, good. Now we have a bullish trend, bullish divergence. So, yeah, 800. While the trade is still floating, I'm still watching for what? The trend switching, from a bullish trend to a bearish trend. I'm still watching. Okay, so I'm still watching. Okay. Now what do? We break even, right? Bring our stop loss closer. Okay, we can just put it in. Okay. Right on. Are still on a bullish trend. Okay. Still bullish. Good. Our break-even stop loss was hit, so we close at profit. Okay, so now we have a bearish setup right now. We have a bearish trend, so we're going to be looking for the bearish divergence right now. So we're going to be looking for bearish divergence right now. Okay. We wait. This is March. So I'm waiting for bearish divergence to. Okay, bearish divergence is taking a little time to. Okay, I have to start thinking because I feel like a bearish divergence was still. It's about to. Okay. The bearish divergence came up immediately when the market is turning bullish, so we ignore it. You see, just follow your rules. We just follow our rules, and then so the market is bullish, and we're just looking for bullish divergence. We're trying to stick to our plan, just our plan, nothing else. Okay, so nothing. So the market is now bearish. You can see the market is now bearish. So look forward for bearish divergence. Market is now bullish. So you can see this period, this a choppy period in the market. So market where there was like a huge consolidation. So we're now on a breakout and expansion period. We're waiting for bullish divergence. Okay. Okay, good. I have a bullish divergence. This was supposed to be it, and then boom, we have a bearish trend. So, okay, you can see the market is just consolidating, consolidating, consolidating. Um, now we have a divergence right here, but we have a bullish trend. So we wait. Okay, bullish trend, no bullish divergence. All these bearish divergences were not taken because the market is bullish. The overall market trend is bullish. Okay, so wait patiently, right? Wait patiently. Okay, this is our signal. Bullish, bullish. TP here. Okay, make sure it's not too wide, and then our stop loss is just half. Okay, good. Okay, good. So I'll bring my stop loss at break even, right? I'll be watching the market dynamics closely. Whenever the market switches, when the market closes, we'll move our stop loss a little bit again. So okay, we'll move our stop loss. Good. Break even. Okay. Okay, good. TP smash. Okay, so keep moving. Remember, we started this back test from January, so it's a strategy we're trying to. So we have another bullish trend, bullish divergence here. Stop loss 130. Okay, fine. Okay, stop loss hit. Market bearish. So wait. Market is bearish. We wait for what? A bearish divergence, right? So okay, we wait for bearish divergence. That's just what we do. 80% of trading is a waiting game. It's a game of patience. Okay, if you're not patient, you just lose the money. So yeah, if you don't have patience, if you don't know how to be patient, then I'm sorry, trading is not for you. Okay, if you don't know how to wait, okay, so 1718, 17 to 800. Okay, that's 1/2. You know, this way news days, the red lines. Okay, then we bring our TP, stop loss to break even. Okay, so good. TP hit, so we keep moving. Wait for next divergence. Market still bearish. Okay, you can see there was no divergence here. So bullish trend, bullish divergence and bearish trend. Oh, we're not taking it. So wait a little bit again. Okay, no bearish divergence. Okay, bearish divergence, bearish trend. We take that shot, right? Our TP below, so 1033, and then our TP should be 608. So now we have a good this thing. We bring our TP to our stop loss to break even. Okay. TP smashed. Okay. So we pause, continue, waiting for the next divergence to. Okay, good. Now that we're done. So we have a strategy of 3% win rate, and these are best trade and these are profits. Okay, so you can open our report and let's see the report. Let's open the report and see the report. Okay, so now I can switch this. I can switch from. Okay, these are reports. We took total trade 15 trades. What's our risk performance? Okay, you can go for the risk performance, profit factor, and everything, and understand how your trade works. Okay, trade analysis. 15 trade. We took 15 total trade, 10 longs and 5 shorts. Winning trades. We won 8 trades. We lost 7 trades. But remember, our profit, our risk reward is 1:2. So we're always going to end up in profit. Okay, so performance, this are performance. Okay, gross profit, total net profit was $6,000 and everything. So let's switch this from this to Bitcoin. Okay, for those who love trade Bitcoin, it's the same thing. It's the same thing. Okay, it's the same thing. So let's take back date, January this year. Select this. Okay. If you love this whole strategy and everything, and you haven't subscribed to this channel, oh, that's wrong. Okay, so do like and subscribe to this channel and turn on the notification button. So we're going to start with this Bitcoin and let's see. Remember the rules for this trade. Okay, bearish trend, bearish divergence, bullish trend, bullish divergence. Okay, so I'll start. Let's watch how it plays. Okay, market is bullish. Okay, so wait for a bullish trend, a bullish divergence, bullish divergence. Okay, we have a bullish divergence on Bitcoin here. So of course, our TP here. Remember, our risk is 1:2, right? So we're going to be losing $1,100. Okay, so TP smashed. Okay, so good. Market is bearish, so we don't take that bullish divergence and then we wait for the bearish divergence to. It's coming. It's coming. It's coming. The bearish divergence is coming. Okay, good. We have our bearish divergence. Okay, we have our bearish divergence. Okay, so TP here. So we have a TP of 2,800. So our stop loss should be around 1,400. Good. So stop loss hit. Fine. Okay. We wait for our next divergence on our bearish trend. We have to wait. That's what all this is all about, the waiting game. Okay, so we have our bearish. Go here. Stop loss is 3,000, 1,007, 1,006. Okay, let's leave it at 1,006. Let's watch and see. Okay, TP hit. Okay. Another bearish. Okay. It hasn't. Okay, good. Market is bullish. So market is bullish. Market is bullish. Market is bullish. We wait for a bullish divergence and then we execute our trade. We are still waiting. Sometimes you can go days waiting for your bullish divergence. Okay, now the market is bearish. So, okay, let us switch back to bullish. Okay, we're waiting for a bullish divergence. Nothing. No bullish divergence yet. Okay, good. We have a bullish. Oh my god. Okay, the market has changed from bullish to bearish. So I'll close this. Okay, so this market has changed to bearish. It's changing, switching. Now we're back to bullish. Just stick to the plan. Just let's stick to the plan. We're not we're not going to be in a position. Let's say, oh, okay, the market we just enter a bullish position, a buy position, and then okay, we believe that the market is going up. No, 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 no. When we're in a bullish position and let's say a bearish trend comes up, just close your bullish position. Okay, that's just the discipline. Okay, regardless whether you're in loss or you're in profit. So just close it. Okay, we have a bullish position here. Okay, or high, we're going to use this high. Okay, 4,000. Okay, and then our stop loss is going to be 2, 3. Okay, good. Stop loss hit. Market bearish right now. Market bullish, eh? Wait for our bullish divergence and then we execute. Okay. Now we have a bullish divergence here, but immediately we have the market switching to bearish trend. So let it go. We do not open bullish or the buy order. Okay. So now we're looking forward to the bearish trend, to the bearish positions. Watch for the divergence, the bearish divergence. That's what we're watching for. Watch for the bearish divergence. Okay. Now, the market has switched to what bullish position. So I no longer want to take the bear. So whatever happens right now, we'll wait for the market is bearish. So like I said, if you're trying to build a very good solid strategy, you need a premium. I missed this. Anyways, you need a premium trading view account. You can't do without that. You can't do without that. You need a premium trading view account. Okay, so don't forget to like and subscribe. And if you would like to know more, like to learn more about trading, of course, you can send me a message through my Instagram. I think my Instagram is on this channel. When you go to the about section, you can see the links. On the links, you'll see my Instagram. You just click on it, and then it will lead you to my Instagram profile or my X account profile. So you can always send in. I think maybe Instagram will be way better since I hardly check my Twitter DMs. So Instagram will be way better. It's okay. We missed this. I think I have to be paying more attention to what we're doing. Okay, so market's bullish. Let me fasten the speed. Okay, bullish. TP here. Stop loss 1.5. Yeah. Okay, good. You can see bearish. So we close at our loss. We'll stay disciplined. We'll stay disciplined. Stay disciplined throughout the course of what we're trying to build. Okay, so if you're trying to build an empire, you have to stay focused. So that's what we're trying to do. Stay focused. Okay, we have a bear. Okay, stop loss 1.3. 1:2. We're out. Okay, so we're out. So now we're down -10. Okay. I have no divergence here yet. Nothing. Market is bullish. Okay. So look. Okay, market is bearish right now, so we're not taking. So market is bullish right now. Nothing. Bearish. Bearish. Wait for bear. Nothing. Okay, we have a bear. We have a bear. Okay, so here 6,000. Stop loss 3. Okay. Okay, so let's start bringing our stop loss, break even slowly. Okay, all right, we are there. So we got cooked. So we'll wait again. Okay, on a bullish. I missed that. I missed that. I missed the opportunity. So let's wait. Bullish. Okay, good. We have a bullish. Yeah, stop loss. Yeah, okay. 1.5. Okay. Okay, move our stop loss to break even. Okay, TP hit. Okay, remember everything is about risks, so it doesn't matter if we lose, if we have like maybe 4 consecutive losses in a row. So it doesn't matter. It's like yeah, everything is just our risks. Our risks is the most important. You can see we're missing this buys, miss them. So okay, so wait for the bear, wait for the selling divergence to come in. Wait for the bearish divergence. Bearish. Okay, good. Oh my God, missed it. Missed it. Missed it. Nothing. What's the date? 30. Let me slow it down a little bit. So no bearish divergence. Nah. We're only dealing with the bearish divergence. So all these are bullish divergence. So wait. Okay. Do we have any bearish divergence? None yet. None yet. None. Let's see something. Any. None. Market is now bullish. Market is bullish. No bullish divergence. No bullish divergence. We have nothing. Market was bullish, but yet we had nothing there. So okay. Our bullish divergence, bullish trend, TP here, a stop loss here. So right now, that's something significantly. You can bring our stop loss to close by. We can bring it close by. So hoping we have a break even, have an expansion that we can, Okay, okay, good. That's a good one. So I can bring our stop loss here. Okay. Okay, good. We have a break even hit. Okay. The market is still bullish, so market is still bullish. Wait for the bullish divergence. Okay, bullish. That was late. That was late over. Okay, good. Two, we went in late, but that was cool. That was great. So, okay, we have another bullish divergence. Market's bullish, so our stop loss 1-1. Okay, stop loss matched. Good. So keep moving, right? So you can see clearly we'll just build a strategy and then we'll back testing it. Back testing over different time frames, different time span and different time speed frames and everything. So this is just a very simple strategy, very good but an effective strategy. Okay, so okay, you can see we have a win rate of one, but we still end up in profit. And why? All this whole stuff, your win rate doesn't matter. All what matters is your risk ratio and risk reward. So I hope this video was helpful to all those beginners wanting to learn how to trade forex, but haven't gotten a very good and soft landing on it. But if you're having any challenges, you can always send me a message and we can deal with that. Don't forget to like and subscribe, share this video, and comment what you experienced trading the strategies. Thank you.